JP Morgan live on the show. Good morning. Wishing you a very happy new year. 2 years ago, we were all talking about that super bull run when it came to commodities. Started to see that fizzled out in 2022. Things are once again looking up in 2023 when we talk about pricing as well as demand with China reopening. Let's just first begin our conversation by setting the context.
Sure. Good morning, everyone. If you look at the commodities, take a broader look across metals, energy, barring coal, everything is up sharply, between 10% to 40% on a YTD basis. And there are essentially three factors driving this commodity rally at this point of time. The first is obviously the narrative change in China. You have gone from zero COVID policy to full opening, and the expectations are that demand will improve as mobility improves and travel restrictions are lifted. There is support also coming through for the property segment as well. So that's positive for demand for metals. The second is the weather. The very warm winter in Europe essentially laid to rest fears about a massive slowdown in Europe from looming gas shortage. Gas prices have collapsed. European activity levels are much better than what was feared. So to that extent, that has removed in the near term the overhang from recession. And the third is the investor fund flows. So what happened was second half of last year, you had a massive deleveraging commodity funds. This year, YTD, JP Morgan Global team highlights one of the highest weekly increases into commodity funds that is driving commodity prices higher. So you have a combination of better demand outlook, less than feared recession impact in Europe, and a sentiment investor move into commodities, which is driving the rally at this point of time.
Hi, great to have you back. Pinakin, while China opening up, great news for commodities. But this is China opening up of 2023, not China opening up of 2003. The demographics are different, population is different, real estate demand is different. So do you think it's too naive to say China opening up, metals will go up?
Sure. So, obviously, this is not 2009, where you had a $1 trillion stimulus in China on a much smaller economy base. What we are talking about is essentially minus 2 to 3% demand moving to a plus 1 to 2%. So the delta is not going to be as massive as what we had seen back in 2009. Having said this, there is a structural supply issue which continues to be there in many commodities. The Russia-Ukraine war has effectively pushed out Russian and Ukrainian steel exports out of the global markets. There is no new aluminum capacity coming outside of China. There continues to be underinvestment in energy. So as long as you have demand growth, which is a trend, and you have underinvestment in many of the commodities, the bullish outlook remains as it is. Yes, you will have volatility, and commodity prices will be volatile, but the supply side remains supportive structurally for the commodity basket.
Pinakin, the metal index is at an all-time high. If I look at JSPL, JSW Steel, these stocks are at an all-time high. Tata Steel is not at an all-time high. SAIL is not at an all-time high. So are we going through that phase where within metals also you will see differentiated outperformers and underperformers? Because, historically it's always metal going up, everything goes up. It's a rising tide phenomenon. Metal prices go down, every metal stock goes down. That's not the story this time.
Sure. We would not comment on individual stocks, but broadly what happens is that within a sector, you can have near-term stock performance differences based on the near-term earnings outlook, near-term growth outlook. But eventually, as long as the cycle is broadly positive, you would have the sector behave more or less unidirectionally. Eventually, valuation differentials do narrow within the sector, but it all depends on the cycle. As long as the steel price outlook remains positive, we would remain constructive on the Indian metal names.
Just to understand your outlook as well on gold, now that we've got gold prices yet again near all-time highs, prices as well are soaring. Do you think historically, going by what we've seen in a rising interest rate environment, the kind of situation that we're seeing with respect to central banks as well adding gold to their treasury as of now, that the year or the outlook ahead for gold is looking promising?
So the JP Morgan Global team, which looks at gold, they remain constructive on gold as a commodity. The macro factors you highlighted should remain supportive for gold prices. I mean, to just give you a sense, right, the JP Morgan Global forecast for commodities across oil, gas, aluminum, iron ore, gold, broadly higher than where the spot commodity prices are. Not by a wide margin, but broadly the trend we are highlighting is that we expect commodities, including gold, to remain well supported this year as well as next year.
What would be the investment thesis then, or any outlook as to what the strategy should be when it comes to investing in gold at the current prices?
Unfortunately, because there are not any gold equities in India, or for that matter in Asia, we really do not have an investment strategy which we can recommend for gold. So as a top-down, at a commodity level, the JP Morgan as a house is positive on gold, but there is no bottoms-up investment strategy.
Pinakin, if you would permit me to ask you a question that is a JP Morgan view, and that is to do with the underperformance of both SAIL and NALCO, which JP Morgan says is puzzling. If you were to look at SAIL also, it's giving negative returns in the last 1 year. Have you managed to figure out why the underperformance, or still a puzzle?
So again, we'll not be able to comment on individual stocks. What we would highlight is that generally when the metals, as a commodity moves, the rally intensifies. And at this point of time, it looks like the rally should intensify, especially as we come out of the Chinese New Year, activity level picks up. You should have the performance gap intra-sector narrow. So to that extent, our view is that stocks where you have consensus earnings upgrades remain well positioned at this point of time.
Okay, thanks so much for joining us here today morning on the show. The metal pack, which is, of course, rallying. There's a lot to talk about, whether it's corporate announcements, the likes you saw in Vedanta and Hindustan Zinc, but just the price action that we're also seeing in commodities, the rally that has come back, beginning with gold, extending all the way to crude, and in the middle, of course, you've got the precious metals. In the thick of earnings season,